Okay, dear. Uh, so where we were in the previous class, I think we have did our job costing and process costing problems also. No, we did these problems, practical problems on job costing and process costing. So today we are going to study about. Are you able to hear me, all of you?
Yes, yes, Mister.
So today we are going to study about techniques of costing. So this is also one of the important topic. Most of the organizations use different techniques of costing. Costing means, as you know, ascertainment of cost. How the companies are going to ascertain the cost. So that ascertainment of cost will also have different techniques. So what are the techniques? There are many techniques are there, like standard costing, budget costing, marginal costing, uniform costing, and all. So today we are going to study about these techniques. So techniques may be used for special purpose of control, and it is one of the policy of the business which technique has to be used. So the first technique is standard costing. Anas, can you read the slide? Anas, can you read the slide? Aisha, can you read the slide? Jihad, can you read the slide? Just sitting simply, huh?
Yes, Mister.
Please read the slide, dear.
Uh,
Standard costing. Yes.
this is a very variable techniques to control the cost. In this technique, standard cost predetermined as a target of performance and actual performance. This measure augments the standard. The difference between standard and actual cost are analyzed to know the reason for the difference so the corrective action may be taken.
Very good, dear. Thank you. So standard costing. Normally, this costing means standard costing. Standard. So before the production itself, this is one of the valuable technique to control the cost. So before starting the production of any product, we will have a standard predetermined target. Like we will say that, for example, to produce a particular product in this particular month, we need to spend or we need to incur a cost of 10,000 real. That's all. So this already we have studied in chapter 1 also, basic things. So we have fixed some predetermined cost. So that is called as standards. Then this we have already predetermined before, only before production only we have targeted our cost much must be this much. And after that again we will do production, and we will see that whether our production cost is within 10,000 or exceeded 10,000. So if it is within 10,000, if it is within 10,000, then it means that you are your standard cost or you are controlling the cost in a better way. If for example your targeted cost is 10,000 but you have incurred actual cost of 12,000, it means that you have incurred 2,000 reals more. So now we have to find out what are the reasons why this 2,000 cost is more. We have to find out the reasons. So this is called as standard costing. So in standard costing, we will have a predetermined cost. Based on that predetermined cost, we will be controlling the cost in a better manner. The next is budgetary control. So this is also like standard cost only. Here also we will have one predetermined cost. Means here we have in the previous slide standard costing we have talk about only one product. But when we are coming to budgetary control, we are talking about one particular period. So in one particular month, our cost should not exceed 50,000, let us say. So this is our budget, budgetary cost. Our budget for this month is 50,000. Now again we will do the actual production. Then we will see that whether in this month our cost was 50,000 or not. If it is within 15,000 50,000, then it's you are controlling cost in a better manner. If it is exceeding 50,000, then it means that your cost is high. So again you have to take some necessary actions. So this is also one of the controlling measure of cost. Why there is an increase in cost? Our budget was 50,000 and we have incurred 55,000 as cost. Then why the 5,000 has been incurred more? What are the reasons? Whether we have incurred more on material or whether we have incurred more on labor or any other overheads, we have to see why the performance is poor and we have to take the necessary actions. Then third technique of costing is marginal costing. Abdul Bari, can you read marginal costing?
In these techniques, uh, separation of cost into fixed and variable managerial is the special interest and importance. This is because marginal costing record only variable cost as the cost of the product. Fixed cost is trusted and period cost. It is transferred to costing profit and lose account of the period.
Thank you, dear. So here, actually, marginal cost is one of the most important technique where the organizations used to follow this marginal costing. Our chapter number 7 is fully regarding marginal costing technique. So what is the difference between marginal costing and normal costing? For example, in our previous classes, we prepared cost sheet. So what we did, total cost, to this total cost, we have added some profit. We have added some profit and we have fixed our selling price, right? In the previous cost sheet problems we did. So here total cost means here this total cost we have taken in total. We have taken all direct expenses, direct in indirect expenses, everything together we have taken. But whereas in this marginal costing, this total cost will not be taken directly. It will be divided. The cost will be divided in two types. One is fixed cost and other is variable cost. So already we know what is fixed cost and what is variable cost. So in marginal costing, this total cost will not be taken together in total. It will be divided into fixed cost and variable cost. So what is marginal costing? This is the technique. The cost are separated into fixed and variable. So based on this, the profit will be calculated. So what is this? How to do this? We will study in detail about in chapter number 7. This is so because marginal costing regards only variable cost as the cost of product. So here the most importance is given to variable cost. Why? Because we can control variable cost in better way. Fixed cost we cannot control normally. We know that. For example, if we are paying factory rent of 10,000, though you produce the product or not produce the product, we have to pay factory rent of 10,000. This is fixed. So we don't have much control on fixed cost. But variable cost you have good control. So for that reason, to control your cost, marginal costing technique is used where fixed cost is separated from the marginal cost, variable cost. The next is absorption costing. It is opposite to your marginal costing. In marginal costing, what we did, total cost is separated as fixed cost and variable cost. Whereas in total costing or absorption costing, the total cost will be taken together. There is no separation. There is no separation of variable and fixed cost. They are taken together. Sales minus total cost, you will get total cost plus profit, you will get sales, or sales minus total cost, you will get profit. The next is uniform costing. Fatma Al Jawhari, can you read the uniform costing?
Yes, Mr. Informed cost. This is not separate technique or method of costing like standard costing or process costing. Informed cost simply just a situation in which a number of firms debit an informal set of costing principle. This helps to compare the performance of one firm with that of other firm and those to derive this benefit of anyone's better experiences and performance.
Thank you, dear. So uniform costing is not a separate technique. This is, for example, if many organizations, let us say telephone companies, communication, Omantel, Orido, Friendly, Vodafone, etc., etc., means all similar type of companies. If they are using same costing method, let us say they are using marginal costing method. Orido is also using marginal costing. Omantel is also using marginal costing. Friendly is also using marginal costing technique. Vodafone is also using marginal costing technique. Means if all the companies are using similar type of costing method, that is called as uniform costing. Uniform costing simply denotes the situation where number of firms like Orido, Omantel, etc. and etc. they are adopting same costing principles and they are preparing their cost accounts based on only those principles. Then it is called as uniform costing. Uniform means same. Every companies are using same costing technique, that is called as uniform costing. So this helps to compare the performance. So if everybody is following the same technique, Orido, Omantel, Friendly, Vodafone, everybody is following same technique. So if they are following same technique, we can easily compare each and every company by seeing their cost records. So this is one of the technique, uniform costing. That's all. These are the five techniques we have studied. What are those five techniques? Standard costing, budgetary costing, marginal costing, total absorption costing, and uniform costing. So these are the techniques of cost accounting or costing. The next is cost accounting standards. Now, what is cost accounting standards? As in uniform costing, we have seen that if all the companies are following same principles means these principles are nothing but standards. So if all companies are following same standards, then it is called as standard costing we have studied. Now, what are the same principles? What are the benefits of same principles? In your accounting, have you studied this one GAAP? Do you remember
Yes, Mr.
what is this GAAP?
General Accepted Accounting Principles.
Yes, generally accepted accounting principles. So these are the accounting principles which are followed for financial accounting, like debit should be equal to credit, everything should be compared with money. There are certain principles you have studied. So those principles are related to financial accounting. So when